So you saw the headwinds that HSBC was talking about, and then you had central bankers over the weekend sort of really sounding much more dovish, especially Mr. Kuroda of the BOJ taking a look and say, yeah, we have more stimulus if need be. Anyone that you could throw a stone at from the ECB also coming out sounding more dovish. Justified?
Oh, I think so, Alex. I think we're on the cusp of a global easing cycle. I think the Fed opened the door with its pause, and the rest of the world is going to follow through. I think it's going to be led by the emerging market central banks, which last year were raising rates to protect their currencies, right, with a very strong dollar. So I think there's room there to cut. I think we're going to see it in China. We're going to see it we've already seen it in India, Brazil, Turkey. There's room to cut. And in the developed economies, I think, as you stated, the central banks in Japan, in Europe, et cetera, are definitely alive to the possibility that they may have to do a little bit more. So there's this little bit of tension. The rest of the world is slowing, I believe, towards their potential growth rates. The U.S. is also doing the same, but we're slowing kind of behind, right? And so we're on that cusp, the turn. And to me, it's Europe. When I think of HSBC, to me, it's the old adage that the news doesn't have to get better; it just has to get less bad. And I think we're very close to that in Europe.
So then when you take a look, I'm glad you brought up EM, because we've had that monster rally. HSBC, Bank of America say, look, you might not want to buy into it. They see you might take a retrench, for the point that if any kind of hawkishness comes out of the Fed and they don't cut, for example, the dollar's going to have upside.
Well, I mean, I think the dollar is a little bit of a surprise here to us. Certainly, we expect to see a weak dollar after the Fed said it's going to pause, and instead it's strengthened. I think in part because the news out of the rest of the world is even worse, right? So, but if I'm correct that we're at the cusp of a turn and we're going to see bottoming in China, bottoming in Europe, then I think that situation reverses, and those markets will do better. In terms of the EM, though, I think at this point we've had a big move. I wouldn't be an aggressive buyer here. I do like fixed income, because with all this dovishness, if you look at EM debt, it's been very strong. If you look at peripheral debt in Europe, for example, also very strong, and that's helpful to Italy, to Spain, to Greece. So there are some benefits to central bank dovishness.